Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 6th of April. Now, as we edge towards the Easter break, the key data yesterday was ISM non-manufacturing PMI numbers out of the US, right? Came in at 51.2. The expectations was around 54.6, I think it was, right? So much weaker than expected. And this really went with the whole momentum of the dollar, right? I was just having a look across the board. And actually, what I was talking about yesterday, the dollar's sort of breaking down. But what we saw after this release, the dollar slowly climbed back. Okay. And the other pairs, well, they sort of just drifted lower. Now, just understanding this, let me just come back to the other screen. Right. What we've got a situation is it's a bit of a risk off day. Okay. US equities lower. Right. So, and the euro, it's hard to see just at the moment because the ranges have just been reset. But euro, sterling, Aussie, well, Kiwi had a big day yesterday with that higher interest rate hike. But these pairs were going down and the dollar pairs were going up. So what we got caught up in is the weaker numbers came out just as we were hoping, right? You're getting yourself set to get short dollars. You've always got to come back just as a cross check, right? Because you come back and see what's going on in the equity markets and see what profile we have in the market. Now, this is where it gets tricky, the fundamentals, because we've got a clear weak number here, which would usually be an easy sell-off in the dollar. But what's happened is, and I was saying this through the week, is all the US numbers are coming out weak, right? Across the board. And it's what that's done is, it's really put a bit of a kibosh on the whole economic situation in the US. If you come back and read the various news articles, and there's quite a few on this, Wall Street ends lower, Treasury yields slide. And this is the key part to it. The Treasury yields, when they start to move, that will dominate what happens with the dollar as data fuels recession jitters. All the data's coming out weak. So it's gone from being, okay, we're trading the individual numbers, buying on strong numbers, selling on weak numbers. All the numbers are now weak. The dollar is falling, but the US economy looks fragile. And then it all of a sudden goes to recession fears. The Treasury yields start to move. And then the risk on, risk off profile comes into play. And what happens is the dollar starts to rally a bit, right? Which is sort of counterintuitive because you think, well, if it's a big problem, the dollar sells off. But this is the way the global markets work. If there's a big problem in the US, more often than not, the US dollar rallies as a safe haven, okay, which is probably the hardest thing for me to explain to new traders. It's just the way it is. So that's what we're sort of dealing with, right? And it's tricky because you come back and have a look at just have a look at the currencies here for the moment. All we're seeing now is, the good thing is just a test. See how the dollar has come back and tested on the dollar index and dollar Swiss. This is perfect technical analysis. The one thing for me where I think it really sinks in, what's happening, check out dollar yen. It's the $1 pair that just went down and sort of stayed down. Okay. Oil is stabilized around $80, and that's giving dollar CAD a bit of a sideways direction. And the other part of just leaving my charts where they are, this sort of price action is really convoluted. Okay, this is euro over the last couple of days. And it's not too dissimilar to what you're seeing on the Aussie and sterling. Right, the market's positioning itself for the US economy is really slowing down. Do we sell dollars or not? Really? Okay, and it's not like the euro or sterling or the Aussie economies are really sort of shining through. The RBA left rates unchanged. The Kiwis, okay, the RBNZ was expected to raise by 0.25, raised by 0.5 yesterday. We saw that little spike up, and that's sort of already been factored in, and it's already gone, right? The dollar is the key trade here, but the market's a bit concerned about what they should be doing with the dollar. So if I come over to global markets, just have a quick look here. Even the equity markets, right? They've come a fair way, and even they are stalling. Okay, so recession fears, what does that mean? Well, it means lower growth, right? So all these companies, all of their profits, less growth, equities start to fall, right? And this is where you get that risk-off profile, okay? risk-off profile, dollar rallies. And you got Bitcoin just cruising sideways. You'd expect, well, gold's taken off again, as you'd expect with all. So once the markets don't make a lot of sense, like in this situation, okay, where the US looks like they're going into recession, the market starts positioning itself for a risk-off profile, the dollar rallies, equities start coming off, and then the safe havens, if anything, start to go up, right? And that's what we're seeing on dollar yen. They're buying yen, they're buying gold. Bitcoin, well, they're not really buying any more Bitcoin just at the moment. Still got that gap there in oil, which at some stage it will be filled. There's no logic. I've seen a lot of things over the years around, oh, yeah, if there's a gap, it's got to be filled. Yeah, that's true, but it could be any time. It's not like today. So just be aware there's a little bit of funky action going on across the board here. Okay, so when you are trading, and well, I was going to say when you are trading, just be conscious of the positioning of the market just at the moment, because it is a little bit hazardous. And when do you know when this whole profile switches on? Well, it can be just one big number that is the catalyst. Like the, as I was just saying, the ISM non-manufacturing numbers, right? These numbers here could have been the catalyst. This is a good tier 2 number. Like, and all the ISM manufacturing was weak, factory orders are weak, everything's weak, right? So this one here, unfortunately, where the others have just been well, I was going to say where the others have just been leading for a nice sell-off in the dollar, so you get short dollars. This one here is like the straw that broke the camel's back. Now we're talking about recession all of a sudden, and the field has changed somewhat. So today, coming into the market today, very important, keep an eye on the US equity futures. This will drive the direction for the majors. Now that we know this, we can actually sort of get a bit more aggressive with the market, because once we start to see the US equity futures, right, that's going to tell us where the US equities are going to open up. That'll determine whether the dollar goes up or down, and then you can start to pick things off. But for me, you know what, I still believe in the weak dollar, right? As I was saying, like you look at the dollar index, dollar Swiss here, less so the other majors, but these two pairs here trading perfectly technically, broken down, come back, retraced, and should head lower. And this is where it's once again, it's a bit of a shame the US non-farm payrolls isn't coming out today. I mean, with the market's primed for it, right? And this is the tricky part of the non-farm payrolls. We get really weak US employment numbers, like a blowout in the unemployment rate. Well, then, you know what? You're going to see, we should see that risk off profile kick in, and that may actually see the dollar move to the top side. And this is the funny thing about it, right? If the unemployment figures actually aren't bad as expected or a little bit better, well, then we may see the risk on profile and the dollar actually come off, right? This is obviously, we're talking sort of advanced structures of the fundamentals. Maybe hard to get your head around, but don't wrestle with the theory of it. Just understand this is the way the market works and connects. The more you experience this, the better. Just having a look at those yields here. Okay, there's not a hell of a lot going on, but I tell you what, the market has got the jitters, right? And you need to be sort of paying attention to those jitters, because it is impacting the overall markets. But for those new traders looking at the markets, trying to work this out, just keep an eye on the equity markets. These US equity futures go down, right? I'll put a line through here. The dollar pair should go up, right? And the euro, sterling, Aussie, Kiwi should go down. That's the simple logic of it. Just be aware there's a couple of different things going on here on some of the majors. Dollar yen, okay, a bit of a safe haven trade. Dollar CAD's caught up in the oil trade. So really, you're looking at dollar Swiss and dollar index as your dollar pairs. Whoops. And euro, sterling, Aussie, Kiwi. Well, you'd think the Kiwi would lag a bit because it's got a little bit of extra strength after that extra rate hike yesterday. But euro, sterling, Aussie, Kiwi really opening up to potentially bigger moves. All right, so good time to if anything, readjust your trend lines. I mean, I haven't done that for a couple of days just to see how convoluted that price action was. And you can see that the trend lines are working, but the market is really sort of testing these levels, right? So just hold your horses. The big move's coming. I can feel it, right? There's a big move around the corner. Sort of almost doesn't help that it's the non-farm payrolls, because that really shakes the market a lot and often can mess things up a bit. But to me, we're starting to get some good trend lines. We've got the US dollar doing some funky stuff, which is good. And we just need the directional push from the fundamentals. If I can just get this to line up, just give you a look at what we're looking at here on some of these charts. Well, I have to go on to the dailies to change that one. But yeah, so that's where we are, guys. It's interesting. But now we are talking risk on, risk off, right? It's not as simple as just trading the numbers. Weak numbers, we sell dollars. Strong numbers, we buy. You've got to readjust to what's happening in the market, and that's where we'll find the good trades, okay? So if anything, to me, still looking at the weaker dollar prospects, okay, you got to start thinking about getting long euro, sterling, Aussie and Kiwi. And you know what? When I say that, I'm not that confident with the euro, sterling and Aussie and Kiwi, because those economies aren't doing a hell of a lot. And just one thing, as you go forward in the next month, the Kiwis have raised interest rates very high. That economy is so tiny that if they go by 0.25 or 0.5 too much, which I think they've done, we could see their Kiwi economy absolutely crash, right, to a halt and then reverse very quickly. So I would be putting Kiwi on your radar and the Kiwi crosses, because I think there's going to be good opportunities coming up in the coming month, right? I'm expecting everything to sort of stop there to a dead halt and actually go negative very quickly. And that's just from my experience, that's what happens there. And we'll see how the rest of the pairs sort of hold up. But right now it's, you know what, I haven't got confidence in the bottom pairs, but I'm sort of really thinking about the dollar. So that's where my mindset is. I just need something to tangibly grasp to get my trades in the market. Right now, it's a little bit iffy. If anything, I tell you what, I'm just keen to see where these US equity futures go during the Asian session. This is where you can get some clarity. And I tell you what, if there was a big news event, okay, in the Asian session or early Europe, that really gave these US equity futures really good direction, you're going to see some really solid moves across these pairs, because they're set, right? We've got tension in the technicals. We just don't know exactly where they're going just at the moment. Right now you can start to see that bit of a correction, a risk on profile. The dollar pair's going lower and the other pair's going up, but it's a bit early doors. We'll see how it plays out. Anyway, good luck. That may be very hard for you to understand. I get it, because and I tried to do my best there to explain it, but the financial markets, the way they interconnect from treasuries, right, to equity markets, to currencies, across the board to the economic numbers, how do they all connect? Well, sometimes it gets flipped up. Excuse me. Sometimes it gets flipped upside down, and you just need to understand that that's what we've got at the moment. All right. Good luck. Bye-bye.